The federal government today released its mandatory gas code of conduct, which it says should secure more gas at reasonable prices for Australian gas users. Key elements include a price cap on gas at $12 a gigajoule, incentives to gas companies to supply more gas to the East Coast, increased visibility around the amount of uncontracted gas, and conduct provisions to reduce bargaining power imbalances between producers and gas buyers. Well, joining me now is oil and gas expert Saul Kavonic. Saul, thanks for being on the show. The code was only released a couple of hours ago, but you've taken a quick look at it. And will it do what it says and reduce gas prices for Australian consumers?
Well, the code is showing itself to not present any surprises to the relief of pretty much everybody in the market versus the expectations that were set a couple of weeks ago when they announced some preliminary guidance and a fact sheet. Now, unfortunately, the code now, as it stands, really represents a complete retreat from the government on its foray into gas price fixing over the last 6 months. And while the retreat is very much welcome in terms of market health, the unfortunate aspect of this is it's basically this code is going to achieve none of those outcomes that the government has said that you've outlined there, but it's done an awful lot of damage in the last 6 months to the investment climate in Australia. So we're now starting to see actually government has secured less gas coming into the market, and to our reputation with international trade partners, and particularly Japan. And so just to be clear, what this code actually represents is a complete walkback of the gas price fixing policy, because what it does is it actually makes exempt nearly every single player in the market from their own policy as small producers. And that includes even the big producers in Bass Strait. They're actually exempt from this policy going forward. And the only projects this policy actually impacts is the 3 Queensland LNG projects. But the government's only extracted some very minor concessions from them, which would really within business as usual anyway, at a $12 mark. So actually, we think this $12 price anchor is a bit of a furphy. It's not actually going to bring down prices for end users. And in the process, we've ultimately come to, they've introduced this kind of very socialist policy. They've ultimately tried 4 different ways of looking at it over the last 6 months. They've now wound it all back again, done a huge amount of damage to the investment climate in the process, and ultimately achieved no better outcome for end users. And unfortunately, that's the situation we now have going forward. But hopefully this now does close the chapter on the Labor government's foray into gas price fixing.
Yeah, how damaged is Australia's global reputation when it comes to gas? We have heard from Japan just last week and South Korea a couple of months ago. How concerned should we be right now with the state of Australia's gas policies?
The level of concern we've heard from Japan and South Korea, as you mentioned, but also Singapore and China, and silently from elsewhere, it's a very high level of concern, particularly for the comments we heard from Japan. This is unprecedented to hear Japanese companies and effectively the Japanese government at every level voicing such concerns, and particularly voicing them publicly. What we're hearing publicly is just the tip of the iceberg. In pretty much every engagement with government, whether it's a Japanese company or Japanese government, they are bringing up the issue now of the gas price policy, but more generally energy policy in Australia over the last 6 months. And this is very, very unusual to hear from the Japanese. And the thing is, Australia has spent 40 years building its reputation as a reliable trade partner to the likes of Japan, Korea, and our allies in Europe and Asia. And that has now been damaged in the process of 6 months. And it's going to take many, many years to build up again. And in the meantime, we're seeing declining investment, declining willingness to engage in trade with Australia. And that's going to have repercussions for decades to come. Keep in mind the budget surplus we've had for the last financial year, almost all of that is accounted for by tax revenue just from Australia's oil and gas sector. But that's because of decisions that were made 10 and 20 years ago to build projects. And we're now going to see a pullback on those decisions now, so that in 10 and 20 years' time, we won't be able to have those benefits that we are enjoying today.
But is this code going to give producers a little bit more certainty? Is it going to potentially encourage now more long-term investment in the gas sector?
Oh, look, it's clearly a wind back, so it's not as bad as it was feared over the last few months. And we will see some willingness, I think, particularly from smaller producers, to bring back some of their projects online. So that is an encouraging. Also, it is encouraging to see that it has been walked back, the harsher nature of this policy. But if you compare this to the outlook versus 6 months ago, we're still seeing gas investment decimated versus before all of this started. And that's the problem when you have interventions like this, is even if you realize it's a mistake and walk it all back, the damage is done and industry has a long memory. And so, yes, we will see some new projects regain traction again, but nowhere near the level that we would have seen had the government never entered into this foray 6 months ago anyway.
Well, Saul Kavonic, thanks so much for coming on the show today. I really appreciate it.
Thanks, Ed.